Welcome back after the break. You're watching Markets at Noon. Let's talk about India UK FTA. India has signed a free trade agreement with the UK in which Indian exports will get benefited by UK waiving off 99% of Indian export. And with this deal, the expectation is that there is going to be a benefit of around $34 billion annually. But to understand this from an economy point of view, I have with me Gaura Sengupta, Chief Economist, IDFC First Bank. Gaura, hi, good afternoon. First question to you. How will this have short-term and long-term impact on Indian GDP and current account deficit?
So I would say initially the impact will be not so visible because right now the impact is not just a combination of, let's say, the reduction in tariff. It's also a combination of how demand conditions are. But the fact that 99% of our products are now going to face zero tariffs and vice versa, in the case of the UK, around 90% of their exports to India is not going to face any tariff barriers from India's case. On a net basis, India will definitely benefit because we have a trade surplus or a net goods surplus with the UK. We also have got a services surplus, but the goods surplus is much larger. So we may see some pickup in terms of our export share to UK. Right now, India's exports, in terms of our total exports, UK is around 3% share, which is a bit small. If you look at from the UK's perspective, UK's imports from India are only 2% share in their total imports. While if you look at the total Asian emerging market basket, UK imports, that share is around 14-15% of their total UK imports. So there is definitely scope. So we could see some pickup in terms of our trade surplus as well as some boost to the services side because the fact that the tariff barriers now between the country are largely removed. The other impact is it will also basically force our own companies to become more efficient and also compete at a more international level without getting any protection from tariffs. But the good part is the kind of imports that we have from the UK are more up the value chain rather than low value added imports. So it won't be that disruptive. But so on a net basis, we could see some pickup of widening of India's share of India's exports to UK. So currently we're just at around 3%. It's one of our key trading partners. We could see some enhancement of that share over a period of time.
Sure. Gaura, this is Kavita. And all right, I really want to understand, or maybe, how are we looking at this deal setting the tone with the US trade talks now? What all do you think can be factored in, or what all can be ruled out?
What this deal shows actually that is India is willing to, for example, the effective tariff that let's say the UK goods used to face in India have come down from a 15% to just 3%. It shows the willingness of India to reduce tariff barriers and to move away from sort of protectionism in terms of trading. And it also sets the tone that we could expect similar deals with other countries. So, in case of US is, I would say, a far bigger trading partner. Around maybe 20% of our merchandise exports actually go to the US, and how we negotiate that particular deal will have a little higher ramification than UK. But the UK deal shows that we would have offered the US significant reduction in tariffs. But for now, from whatever we are gathering, it looks like that the agreement between the US and India will take a little longer time. So it'll be interesting to see what happens after August 1st, especially when it's likely that the US would increase bilateral tariffs from the pause period right now, which we are around 10%. Currently, India is enjoying an advantage, especially in its trade with, let's say, the US, because compared to other Asian currencies, because we have a pause period bilateral tariff of only 10%, we are at an advantage compared to, let's say, our other Asian countries. That some of that advantage might go after August 2nd, assuming that briefly the tariffs get revised up. we still expect that India will reach a deal. The UK deal shows that India most likely in its negotiation with the US would have also offered substantial reduction, broad-based reduction in tariff barriers. So in a way, I would say post the UK deal, it's even more likely that we could reach a deal with the US. It's just taking a bit longer than expected.
Gaura, Mansi this side. First things first, you have got a very unique name. And now moving to the India-UK FTA deal. Yes, it's a landmark, a milestone in itself, a historic moment which we all were waiting for. And it is creating a synergy for the economies of both the nations. Two brief things I want to ask you here is, one, could the FTA trigger a shift in India's manufacturing competitiveness? And could service liberalization under the FTA help narrow India's unemployment gap?
First of all, thank you. So in case of manufacturing, the fact that the whole Trump war, which basically started off because the US has a massive trade deficit with China, has inadvertently had a very positive impact that now you're seeing by other countries reaching bilateral agreements with each other much more faster. I think the number of agreements that have been reached in 2025 is significantly higher than what we have seen in the past. And these are broad-based reductions in tariffs. So thanks to the push that this tariff war that was initiated by the US, it might result that maybe along some months or maybe next year, we'll have a sort of a global trade where you'll have much lower tariff barriers, both for right now for merchandise. It's mostly focused on merchandise, but you'll have a more level playing field where companies will be having to compete with each other without the protection of tariffs. It will force the manufacturing sector in India to have to move a little up the value chain and also increase the quality and cost competitiveness. That definitely is also one of the focal points. For services, I think the important part is a large part of our services is dependent on the US. Around maybe 70 to 80% of our software services is going to the US. The good part about this UK deal is it's not just merchandise, it's also including services. We are a net service surplus country with the UK, but we're a little smaller in terms of the services surplus with the UK is a little lower than what we have in terms of merchandise. But we are seeing some liberalization in financial services, liberalization in professional services under this agreement. Importantly, liberalization of movement of professionals from India to UK, which is a good sign. And what is important is right now, because majority of our software services is going to the US, we need to have more such deals on the services side to diversify our services export basket. On exports, especially goods exports, if you look at India, we have a very well diversified export basket, 50-50 between developed markets and emerging markets. Yes, US has a large share, but it's around 20%. I would say it's very well diversified. The more well diversified is your export market, the less susceptible you will be towards, let's say, a particular country changing policy. In the case of services, we are much more skewed and much more reliant on the US economy. And such deals with, let's say, Europe, we are working on a deal with the European Union or a deal with, let's say, the UK that we have reached, will help us diversify our services export. So that's, I would say, it's a good first step.
All right, Gaura, thank you so much for joining